Today's real concept is called input tax credit or ITC. It is something every registered business must understand. ITC is a way to avoid paying tax twice on the same value. If you understand this one concept properly, you will understand the entire logic of how GST really works. Hi friends, today let us learn about input tax credit, that is ITC. Before getting into the practicals, let me explain ITC with simple example. First of all, ITC means input tax credit. For example, if you buy a mobile for 1 lakh rupees, on that you have to pay 18,000 GST. The total amount of the bill is 1,18,000. And if you sell the same mobile for rupees 1,50,000, the tax you have to collect is 27,000. So the bill amount is 1,77,000. Now the question is whether you have to pay 27,000 rupees to the government as GST. The answer is no, because 27,000 GST you have collected during sales and you have paid 18,000 GST while you are buying the mobile, and so you have to deduct this 18,000 from 27,000. So you have to pay only 9,000 to the government. So 18,000 tax you are deducting because you have paid when you purchase the mobile. So that is called ITC, input tax credit. Friends, now let us get into the practicals. In the last video, we have entered 2 sales invoices. So let us enter purchase GST invoice today. Go to vouchers, press enter. Already purchases is there. So you press enter. Here you have to select supplier name. I will select Devi Industries, press enter and save it and Control A, save it again and select purchase account. Here item, press spacebar, select Samsung, press enter. Here quantity, enter 4 numbers, press enter. Here I will enter 50,000, press enter and come down and keep it as it is. Press Control A, come down, press spacebar, select CGST, press enter. Automatically the GST appears here. Press enter, select SGST, press enter. Here also the GST automatically appears. Come down and press Control A to save this voucher. Now come back by pressing escape key. Now go to display more reports, press enter. Go to GST reports, press enter. Now go to GSTR1. Here you can see the sales. See here B2B invoices and 2 numbers. 2 invoices we have made sales invoices, and this is the IGST, CGST, SGST and total tax amount, and this is the total invoice amount. If you want to see detail, press enter. you can see each invoices and press escape to come back. Now go to GSTR 3B. Now you can see here the tax on outward, that is sales, on sales, and this is input tax credit, and this is the net input tax credit available. You can see the report clearly. Come back. Before we close, we have 4 conditions that must be true for claiming input tax credit. Number 1, you must have a valid tax invoice from your supplier. Second one, you must have actually received the goods or services. Third one, your supplier must have paid the GST to the government and filed their returns. Fourth one, you must file your own GST return claiming the credit within the prescribed time limit. Friends, your challenge this week is record a GST purchase invoice in your practicing company, then open GSTR 3B and find your input tax credit available section and compare it against the GST amount on your purchase invoice. They should match exactly. And drop a comment if the ITC concept makes more sense now. If you find this video valuable, please like it and share it with someone who is learning Tally, and subscribe for this channel to have more videos like this. Thank you so much. Let us meet in the next video.